Hello, good evening, everyone. Good to see everyone once again. My name is Alex from MarketWise Asia. Today it is the 25th of November 2022, as usual, a Friday evening, and today also coincide with the World Cup. Okay. Anyway, if you guys can hear me loud and clear, please say a hi to me in the chat box or in the comments. This live stream is broadcasted to both YouTube and also on Facebook as well. Wherever you are, just say a hi to me in the comments, in the chat. I'm friendly, I won't bite, okay? All right, so that I know that everything is good, everything is well. Give me a like, share, or comment if you could, okay? Liking is free, doesn't cost you money, but it tells Facebook and also YouTube that you want to see more of our content in the future. If you engage with me, and you also signal the algo to YouTube and Facebook. Okay, all right, let me take a look at the comments right now. Hello, Wei Lun, Adeline, Dave, Henry, Rielam, or SK, okay, Pei Wen, Benson, okay, Team, Kim Ying, Chingon, Christina, Stephen, Mark, Xiang Jun, Helen, Michelle, Nelson, W555, okay, do you change your nick? All right, Juki, SP, David, Amanda. So good to see every one of you here. I think today the attendance rate for my Facebook Live will get slightly low. I don't know how it goes because it is the World Cup. Later 12 a.m. there will be a match. Is it the Netherlands versus what's the country? Ecuador. Okay. And then 3 a.m. there is England versus the US. How many of you here are watching the World Cup later? Okay, just type me in the comments. Just type me in the comments. Okay, I'll be watching later. Yeah. DJ say, yeah, World Cup. Yes, that's right. So yes, so we shall see how it goes. But nevertheless, okay, I try to keep this session sweet and short. Okay, hopefully, later you still can catch the match between Netherlands and Ecuador as well. All right, hello Mary, hello Dave. Okay, keen multitask. You can multitask, but I can't. All right, so yes, okay, so as usual, okay, today you can see on the right hand side of your screen, today it is also proudly, today Facebook and YouTube stream is proudly sponsored by Nasdaq. Okay, so before I head into today's session, okay, Incher, okay, this will be a pre-recorded video. So Nasdaq Incher did a recorded video for us. Okay, Incher, APAC Head of Product and Support Investment Intelligence Unit from the Nasdaq. Okay, we'll share with you more on the US market structure today. So the video, it is about 6 minutes long. So do enjoy the video, learn more about the US market structure. So I will come back again really soon. Okay, let me play the video. All right, so I will see you guys in about 6 to 7 minutes time. See you in a while. All right.
Hello, everybody. I'm Incher Bo, Head of APAC Products and Support in the Investment Intelligence Division. This is part of Nasdaq ongoing investor education series for the APAC investors, and today I'm going to share with you about the US market structure. It consists of 2 parts, and in this video, I will cover part 1 of 2 on this topic. As you are aware, over the last 2 years during the pandemic, we have seen the rise of retail investing into the US market. Hence, it is important for investors to understand the characteristics of the US market and the understanding of the US market share. In Asia, most markets operate a single exchange, and when there are multiple exchanges like China and Vietnam, these markets offers only a single venue and source of market information about the listed stocks being traded. The US market operates very differently. To understand the US market, we first need to understand the US market structure and the ecosystem within the US market. Firstly, the national market system. This national market system creates a standardized market system for issuers, investors, and liquidity providers, allowing companies, investors, and traders to interact at the same price despite each participant varied time horizon and different trading signals. Unlike APAC markets, however, a stock in the US market can be traded across different US exchanges as highlighted in the diagram on the right. I will share more details later in my presentation. In US, because of the US market structure, firms compete vigorously to provide the best bid and best ask to the public through transparent prices. This competition creates tighter spreads that not only reduce transaction costs, but also form prices that everyone can use for portfolio valuation and to find new assets to buy or sell. Like most markets, investor participating in the US market comes in two main flavors: institutional and retail. Data suggests they both have around the same capital to invest, approximately $25 trillion each. Other owners of equities include hedge funds, banks, market makers, arbitrageurs, family offices, pension funds, and foreign investors who hold US equities of investment, risk management, or trading purposes. Although each of these participants have different objectives, they all play a critical role in keeping the markets efficient and liquid. While the US market may be the largest source of equity capital in the world at $49 trillion, US markets are not alone in their mission to bring buyers and sellers together. Public markets also have to compete with private and international markets when attracting new listing. Listing and trading can occur in different trading venues in the US. This is where things get more interesting when I next share on the listing and trading venues in the US market. The US exchange landscape is comprised of 17 independent trading exchanges as well as multiple trade reporting facilities, or TRF for short. While all 17 exchanges compete for order flows, 5 of these markets have the additional distinction of being listing exchanges. Generally, a listing exchange is the exchange where a company sold shares to the market for the first time under the initial public offering, IPO or direct listing. In 2021, Nasdaq led US exchanges with 753 IPOs, raising $191 billion in proceeds. However, listing is not the only arena in which exchanges compete. Exchanges also compete for trading volume and providing proprietary market data products, and so on. In the next slide, I would like to introduce you to the Unlisted Trading Privileges, or UTP Act. Back in 1994, the SEC amended the Securities Exchange Act of 1934 to introduce unlisted trading privileges under the UTP Act. This UTP Act allows exchanges to compete for order flow regardless of where the operating company is listed. This effectively means that any exchanges can trade any securities regardless of where that securities is being listed. Of the 17 active exchanges, Nasdaq owns and operates 3 of them, including Nasdaq, BX, and PXX. NYSE have 5 venues, and CBOE has 4 of these venues. The remaining 4 other exchanges that trade less than 5% of volume includes IEX, MEMX, LTSE, MIAX, and the newest one is BSTX. Across all listed US securities, 60% of all trades by volume are matched through one of the 17 trading exchanges, but differ on a security basis. Nasdaq is the largest single exchange as measured by market share of today's trades every day. You may then ask, what happened to the remaining 40% of the trading volume then? I will share more insight on this in the second part of this topic. Please watch part 2 of the US market structure. If you are looking for more content on the US market, feel free to visit this website. Thank you.
Okay, thank you, Incher from the Nasdaq, for presenting this video on the US market structure. So I hope you guys understand a little bit more on the US market structure over here. And once again, thank you, Nasdaq, for sponsoring this Facebook Live over here. So back to my screen over here. Let me do a share screen here. Okay, do a share screen here. Okay, so you guys can see, right? So right now we have about 150 people in the room right now. Okay, getting a little bit more. Okay, today. Okay, World Cup today. World Cup today. For those who just joined today, later at 12 a.m. All right, so give me a like, share, or comments. Okay, liking this video doesn't cost you money, but I will appreciate very much. Okay, all right, so let's get started over here. First of all, disclaimer: whatever I share today is just for education and information purpose. It is not a recommendation to tell you what to buy or what to sell. So Alex could be wrong. So please do your own due diligence. Ken. And secondly, all right, we have this Telegram channel and also our YouTube channel over here. So please just subscribe to our Telegram channel and also our YouTube channel. Okay, so let me post the link in the comments over here. And as mentioned previously, our Telegram channel, okay, this is where a lot of things happen in the Telegram channel, the latest updates, price mover, latest market news, and time-sensitive news. I'm going to share about my outlook of the market. Because of this time sensitive, right, I can't really share on Facebook or send an email to you. So the best way is this, to subscribe to our Telegram channel over here. So I can give you some of my updates over here, all this, okay, some video. I hope you guys have watched this VVIX over VIX ratio. Okay, I just posted, I think, about 2 days ago only. And also of course YouTube channel. All right, nowadays it's very easy to remember lah. Nowadays just youtube.com/@MarketWiseAsia. All right, and of course I also have this insider course to technical trading. I believe, okay, for those who have been watching me for some time, you should already know. I mentioned that I think for the past 3 YouTube live already. So this is the content over here, the landing page over here. Okay, so all right, so there's 11 module over here. I won't go through all the module. Basically, interesting one. Okay, right, trend analysis, how to spot the trend in just 3 seconds, support resistance. I don't draw horizontal support lines. Okay, the key moving averages to use on your chart. Okay, the number one candlestick pattern you should stay away from. And once again, you can see from this Telegram channel over here, this is the number one candlestick that I don't like, which I share with you in this course as well. I think for those who have been following me, you should know already, how to follow smart money and spot trending markets, and how to uncover the trend, condition, breadth, sentiment, etc. Okay, so very simple. You can just see the button, just click on it and roll now. Fill your name, email, and mobile, and you are good to go. I think there's some issue with the forget password thing, right? I think once you enroll, right, you'll be you receive an email asking you to set your password to access the course. I think there is some issue with the reset password. I think a few email me. I will look into it and send a support ticket to the provider, and hopefully after that the problem shall be solved. Okay. Meanwhile, remember your password. Okay, do remember your password. You will need a password to access the course. Okay. All right. So with that, that's all for the announcement over here. So today, all right, today, I'll share with you of course, the market updates, right? Can the market extend its winning streak? Okay, I'm talking about the leading sectors, industry, and also talking about, okay, the equal weighted index. Okay, so I'll talk about that later. So for those who have been watching me for some time, I do talk about the S&P, 500 equal weight index, but there are more things. All right, then I'll share with you later. Okay. Kagura said is the technical analysis course in depth. It is for you to find out lah. So some of the things I share are not typically found in textbook. Okay, so it is free. All right, nothing doesn't cost you any money. So all you have to do is just register. If you don't want to register, it is fine as well. But it is up to you. Okay, but I think it is worth your time to register. Okay, all right, Ken. All right. So let me see. Okay, yeah, what did I tell about that? Okay, can the market extend its winning streak? So if you see the market right now, the S&P 500, it is above 4,000. The Nasdaq, okay, right now is hovering just slightly above the 50 days moving average, and the Dow, I think, is the highest for the past 3 months over here. All right, so yeah, so talk about that. Yeah, okay, Ken, let me just go through what we talk about. All right, so actually, do you remember? Okay, let's talk about the market update. So sorry for jumping there and about. Okay, so let's talk about the market updates first. Okay, All right, then I'll go through the leading sector industry and the equal weighted index. Okay, Ken, if everything is okay, so good. All right, just give me some response so far. Okay, just type okay, type okay in the comments. Entertain me a bit, and entertain me a bit. Okay, so anybody remember what I said last week on the market? Remember or not? Okay, so I think not too bad, right? My analysis is quite June. So yes, last week I mentioned that the market should be able to go. Let me go through this. Should be this one. Facebook Live. Okay. Candlestick. All right. So last week I mentioned that the market can go a little bit higher. All right. So last week was actually on the 18th of November, right? 18, it is somewhere around here, right? 18. This is, no, I'll just go through the S&P first, okay? S&P over here, 18 was here. 18 was here. This was the vertical line. So last week I said that, hey, there's a chance that the market could continue to hit a little bit higher. All right. The reason it is because, okay, you can see a few factors. Okay. First of all, is that I can see from the Russell 2000, the small cap, it is hovering at a very key support area, that it is the, Ichimoku cloud horizontal support. As I mentioned, right, the Ichimoku cloud, the horizontal support, it is a very, very strong support. Okay, and I could be lucky. Okay, market just continue to hit higher this week over here. Okay, and then talking about the weak dollar, weak US dollar and such. Okay, talking about the VVIX. Okay, there's some slight divergence over there. So these are the various factors that I think that the market can continue to hit higher. And of course, yesterday was Thanksgiving. All right, market is closed, and today the US market is actually half day. So by Eastern time, 1 p.m., that is Singapore time, about 2 a.m., the market will be closed. So today is a shortened day. So the whole week is shortened as well. Okay. Yeah, so far it is still doing pretty well over here. So, all right. So, okay, before I go into that, right? Okay, case study. I'm not sure. I think for those who stayed with me until the end of the session, right? I mentioned that I entered on this ticker STKL. STKL is this, okay? STKL is this Sun Opta. All right. So there are how many of you actually remember I mentioned who stay with me? So if you remember, just type STKL with me. So in fact, there are a few subscribers who asked me, hey Alex, why do you choose STKL? This Sun Opta. By the way, Sun Opta is some doing some organic food F&B lah. Okay, some asking, wait, why do you enter STKL? So this is a case study. So I just explain to you my reason, my rationale over here. Okay, so they were asking, hey Alex, a few asking, hey Alex, price is in uptrend, but price is below the CPR and also below the cloud. So why do you enter into this? Okay, of course, this is based on the daily time frame. All right, so if you actually look at the weekly time frame, right? CK says vegan food. Yes, that's right, vegan food, organic stuff. I don't know what thing. I just don't know. Also, purely based on price action trading. All right. So I do some scanner filtering and see this chart. Not too bad. So if you look at this weekly time frame, so it actually go up, go down, and then go up again. So not that important. The previous history not important. Important it is over here. All right. Can you see that price actually broke above the cloud and then retest the cloud level? And what is this? Or not? This is a flat cloud support once again, right? Is it a flat cloud support, right? Flat cloud. If you can see, just type flat in the comments. I mentioned last week also, not flat, it's flat. Flat, okay? Flat cloud, it is a very strong support area. All right, so technically on a longer term time frame, all right, this is also in an uptrend, all right. Kagura, I believe you are new to MarketWise Asia, so not to worry. So I have this tutorial. Okay, you can just, I don't have the time to explain to you what it is cloud and all this today. Okay, but I have this tutorial where I will share with you how to insert this into Trading Viewer. Here I'll post the link in the comments. Right. So yes, that's right. Wei Lun, that one is considered a pin bar, but weekly pin bar I still can accept, but daily pin bar I will avoid. Okay, weekly pin bar I will still accept because I think our weekly time frame still not a lot of people are watching the weekly time frame. Okay, I will still be skeptical, but daily time frame it is a no. So it's still a bit discretionary. Wei Lun. Okay, so flat cloud support over here. All right, and then if you look at what did I say about 2-day time frame? This is the time where the 2-day time frame will come into use. Okay, 2-day will give you another perspective. So normally people watch the looking at the daily time frame, which is the 1-day time frame, daily time frame, and also the weekly time frame, the normal standard one, right? So every time I say you should also look at the weekly time frame for another perspective. You look at the 2-day time frame. All right. So what do you see overall? All right. Can you see or not? So all in a downtrend, I don't touch. I'm not interested to buy something that's in a downtrend if I'm into swing trading or position trading. All right. Especially for swing trading, I only want to buy something that's on uptrend. So once price has broken above the cloud, it signals an uptrend. Uptrend, right? And after that, what does it do again? All right. So after that, go up a little bit and then come down, right? So it's a pullback. The pullback is a pretty steep one. All right. And then what does it do again? Okay, can you see what does it do again? It hovers at the flat cloud support area over here. Now this is a very, very strong support if, okay, the market is to be continued in an uptrend. Okay, so of course, I can see that the support over here and the distance between the central pivot range, okay, there's still quite a distance. There's a potential chance that price could still go back and test the central pivot range somewhere around there. Okay, and if you zoom back to the daily time frame, so that's the reason why I bought somewhere around there last week. So again, okay, this is the wash bar over here, okay, and then this is this bar. Okay, this bar is the rinse bar. Repeat one time. So this is the wash bar. Okay, this is the wash bar, and then this is the rinse bar. Okay, I didn't enter at the closing, somewhere around during the day itself. I entered. So I'm still holding it. So Benson is asking what's your profit target. It is actually 1.5. So a little bit higher, I'll be getting this 1.5 risk to reward. So yeah, somewhere around near the central pivot range. So I'm still holding, but I will throw my stop already. Okay. So I think this is all clear on the STKL. Okay, so because a few is asking why why I buy, because it's on the daily time frame, it is below the cloud, below the central pivot range. So that's the reason why I look at the weekly time frame. I also look at the 2-day time frame. All right, Ken. Okay, so that's the reason why. So I'll move on to the next topic and to watch to share with you. Okay, it is this. Okay, so the question. How do you choose STKL? Yeah, this is the ninja skill. Okay, ninja technique. No, not ninja technique. Basically, I have a filter, a scanner where I screen out some of the parameters, criteria that I want. So one of the stock is actually STKL. So then I go in and see, hey, can trade or cannot trade. So it is still manually. I still need to see through some of the charts, see whether I'm going to take the trade or not. All right, Ken. Case study, sentiment. So right now the sentiment, actually it is still pretty, I don't know, is it bullish or bearish to you? Okay, to me, because I'm quite active on Twitter, so the Twitter sentiment right now, it is still pretty decisive. I think not decisive, I mean divided. Sorry, the sentiment right now is still pretty divided. I think last week I was asked about whether market can go up or not. Some people also mentioned that, it is just a dead cat bounce, a rally, just a dead cat bounce rally, suckers rally, and such. Right? And especially on Twitter, there are some people who are really, 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 really bearish. Okay. So as I mentioned many times already, as long as the market sentiment, it is still divided, okay, there are still bull camp and bear camp. I think my sentiment right now, it is still more towards gravitating towards the bullish side, okay, until maybe about end of the year, okay. I repeat, Alex do not know what will happen after 2023. I have no idea, okay. All right, so just want to share with you this Twitter sentiment over here. Let me go to Twitter first. Then I share with you. So just share with you this guy over here. Okay, I think it's this guy. Let me shine. Wait, let me find first. Okay, all right. So there's a lot of different of sentiment. So this guy, okay, this guy, it is Puru Saxena. Okay, so it's an investor, retired manager. It is actually, he's quite popular on Twitter. All right, so we can see that he has about 300K of followers. It's quite a lot now. So long story short, okay, long story short, when the market started to correct, okay, or crash, okay, at the start of the year, he was still very bullish. So he was all the way bullish. So why you should buy this and such. So okay, until somewhere recently, I think a few weeks ago, then he said that he's wrong already. Then he turned bearish, and he actually, if I'm not mistaken, okay, based on what the tweet people are saying, all right, I think he shorted somewhere. So I think from all the time, he was bullish, but market just kept going until he tahan already, he capitulated. Then he turned short. Okay, he turned short. So I think maybe somewhere around here. Then the market just rallied all the way up. Okay, all right. So in fact, there is a parody account. I think it's making fun of him and such. Okay, okay, all right, smoking fun of him. But the key thing is, okay, I respect any views over here. Okay, so it is okay to have different views over here. So as long as I mentioned, as long as people are still negative, undivided, as in divided over the sentiment, then I think the market still have a chance to go up. What they call climbing a wall of worry. Okay, all right, okay. And what, again, I think I repeated many times already, what I don't like is that I don't like people who are there. Gary say, this guy, better not to follow him. Yeah, okay. Again, I'm okay with different views. One, okay, if you are bearish, you can explain to me why you are bearish. I'm perfectly fine. Okay, what I'm not okay, I think I've repeated many times, is that you are damn sure, cocksure of why you are bullish, and you think you are God. All right, so I can still see many YouTubers, influencer, okay, be on YouTube, Facebook, etc. Okay, some will say that, hey, this is a suckers rally. Okay, this is a suckers rally. The market must come down. Okay, or they say that the bear market is not over yet. Okay, they are very firm with their kind of view, and they seems like 100% sure. So this is something that I cannot accept. All right, so explain to me why you are bull, explain to me why you are bear. Okay, all right. And again, I can accept different views. Okay, but for me, I'm still bullish on the upside, at least until end of the year. I repeat my time. And later I'll explain to you why, okay, using the equal weighted index can give you another view, okay, that the standard S&P, the Dow, and also the Nasdaq 100 cannot give you. All right. So I also share with you this VIX. Okay, there will be times where I will be cautious. Okay, but I think as of now, the market might still have some room to go up. Okay, but I think the upside, it is limited already. So I will share with you why. So one of the reasons why is looking at the Dow. Okay, if you realize, right, Dow is the strongest among the three indices. Okay, among the three indices, it is just somewhere, all right, 6%. Okay, near 7% before it reaches the all-time high again. Okay, it is the strongest. This is the all-time high. All right, ATH all-time high, just about 6% plus to all-time high. So it's the strongest. All right, but if you add in the volume profile over here, okay, so let's just do from here to here, all right, to here. Okay, let's just no, somewhere around here. Okay, the range over here. All right. Okay, yeah, this is the one we'll see. Okay, so volume profile. I want to see where the highest volume transacted at what price. So the normal volume is over here. Volume over time. So over time, you'll see what's the volume, right? April, June, August, April, June, August, October, and such. Volume over time. So volume profile is volume over price. I want to see at what price is there the heaviest volume. I can see that over here, this is the, all right, the point of control over here, POC, this horizontal blue line over here. Okay, so we are somewhere around there. So it is about, let me draw the horizontal line. 34695. Okay, that is about 34,700. Thereabout. Okay, 34,700, and we'll be reaching this point of control over here, this volume. All right. Okay, and this will be acting as a resistance, heavy resistance over here. All right. So just about 1% more up. If the Dow can move up about 1% more to 2%, so this is the area that you should watch out for, which means that when price hit this area over here, there could be a chance that the market, okay, might come down. All right. Again, I have absolutely no freaking idea, okay, whether the pullback is going to be a shallow one or a steeper pullback or totally a crash, okay, like that. I have no idea, okay? I have no idea. All right. Ken, all right, if you understand what I'm trying to say, just type Dow in the comments. I'm sharing about Dow. So I have no freaking idea. Let's say, for example, if the market hit the volume profile there, right, the market might do a pullback, which in turn will affect the S&P, okay, and the Nasdaq as well, right? You can see that over here, actually, you can see price action. There is a lot of consolidation over here. So this area is actually a very strong resistance area. All right. So repeat, if the Dow hit about 34,700, then you should be really careful already. So this is really not the time to really enter into new position. Okay. If you are still holding on to some position, I think the market can still go a little bit higher. Okay. The breadth is at a high already. It is, the upside, it is limited, but still might be able to go a little bit higher. All right. That's my view over here. All right. So okay. So, and looking at the VIX also, I'm also looking at the VIX and also the VVIX over VIX ratio. Okay, let's turn to the VIX right now. Okay, if you realize, okay, the VIX has been dropping all the way. All right, and we are somewhere near the mean area, mean number. Okay, 19, about 19 is actually the mean value for the VIX. So this is 19, the mean. All right, this is SD1 standard deviation, one standard deviation, and SD2 two standard deviation. Normally, when the market is fearful, all right, by 2 standard deviation, it is a good time, to buy the market, because you can see that 2 standard the VIX will go down, 2 SD, the VIX will come down, 2 SD, the VIX come down. All right, so we are somewhere near the mean already, but that doesn't mean that the VIX cannot go down further, but we are near the low over here. Okay, the market are approaching the complacent stage. Okay, and can you see the star signal over here? Okay, my star signal, my proprietary signal can also work on VIX as well. So the previous star signal, okay, it is not always 100% accurate, but you can see that it's not all. This is not the exact indicator. I'm just putting the star logo over here, the shape over here. So this is not exact indicator. I'm just putting here to let you show you. So previously, okay, when the star signal appear, all right, it was here. So this didn't work out. Okay, this didn't work out. So all right, let me show you the one that worked. Okay, maybe I can show here. So you can see that when the star signal appear here, okay, this is the bottom of the VIX, which means that the VIX might go higher. If the VIX go higher, which means that there's fear, okay, the S&P market will go down. So since again the star signal appear here. Okay, then the VIX go up. This is not the actual bottom, but somewhere close to the bottom of the VIX, and then the VIX go up. Somewhere at the bottom, the VIX go up. Somewhere near the bottom, okay, and then the VIX head higher. All right, somewhere near the bottom, the VIX head higher. Somewhere near the bottom, the VIX head higher. Okay, and then also in 2020, okay, hit the bottom over here and then head higher. Okay, the latest one was actually here. The latest one was actually here. Okay, so this is not accurate. Okay, in a way that it doesn't really rally. Okay, the VIX. Okay, and right now I'm watching this star signal to appear once again. So if the star signal appear, maybe I don't know how long more. Okay, based on what I see, maybe another 3 to 5 trading days, okay, there's a potential that the star signal might appear again. So once again, if the star signal appear, then I will be very, very careful, which means that, okay, it will, okay, there's potential that the VIX will spike again, which means that the market will have a correction, a pullback, or crash, okay, whatever you call it. All right, can understand so far that what I'm trying to say? All right. So if you understand what I'm trying to tell you on this, just type VIX in the comments. Right now, I have 180 people in the room. Just give me a like, share, or comment if you enjoy the video, if you think I'm providing value to you right now. Liking is free, doesn't cost you money, but it will mean a lot to me. Okay, support me. Okay? Give me a like, share, or comment. Okay, so I'm watching this star signal to appear on the VIX. And talking about the VVIX, the VVIX. All right, so the star signal, I also put the previous star signal also. Okay, not all. So previously, okay, I think if you have been watching my Facebook Live, all right, the previous 3 signal I put was actually here, right? Okay, 1, 2, 3. Okay, so when the VVIX over VIX ratio hit the low, okay, the market, and it spike up, okay, it goes up, the market rally, and the market rally also. All right, so previously the top, okay, was also here. All right, so can see over here, the top was here, the market will come down, the top was here, not as exact top, but somewhere near, the market will come down. So I still consider this a valid star signal. Somewhere around here, okay, the market will come down. Somewhere around here, the market will come down. So the latest one actually was here. Okay, I think at the start of November. All right, so this actually didn't work out. Okay, the star signal appeared, but the market just dropped. I think 1 or 2 days. Okay, and then rebound back up again. So the market continued to go higher. So once again, I'm also watching for the star signal to appear. So if the star signal appear maybe somewhere around here or whatever it is, okay, then I'll be watching the market very closely. So, okay, then there's a potential that the market might come down. Okay, so this VVIX over VIX, okay, it is correlated to the market, which means that if the market is going up, okay, this ratio should be going up as well. Whereas for the VIX, it is inversely correlated. When the VIX spike up, okay, the market will correct or have a pullback. Okay, so the VIX is inversely correlated, whereas the VVIX over VIX ratio over here, okay, the VVIX over VIX ratio, it is correlated. Okay, all right. I think I answered. I think I answered this question already, right? So which means that, okay, market, it is at the bottom. Market is at the bottom. Market is at the bottom. This is the star signal appear. Market is at the top. Market could be potentially at the top. So you want to take profit on your current, equities position and such. All right. So let's then wait until next week. Then can see if have the star. Yes. So have to wait until next week. Then we can see. Yeah, Sean. That's right. So this week it won't happen. Yeah. Okay. So all right. So how about gold? Gold. I think I mentioned last week, right, Stephen? Normally towards the end of the month, okay, the precious metal, or early December, then the gold, based on seasonals, then it tends to rally. So right now, I think I didn't really watch gold because it didn't give me any signal. So maybe I'll see about gold later. Okay, but as of now, gold. Let me take a look at gold. Overall, the market for commodities, it is still not looking very good. And see, can see gold or not? Can see gold or not? See, what is this candlestick pattern? What is this candlestick pattern? What is this candlestick? Hammer, right? Hammer. I will avoid. Okay, I will avoid. So people will see this hammer candlestick pattern. Okay, this is a rally and then a pullback. Okay, and then they see a candlestick pattern hammer and they see that, hey, this is at a prior resistance, broke out, test the support area over here, and then they go in and buy. Can the market go up like this? Can. Obviously can. It could go up like that. But a lot of times, okay, if I'm not mistaken, there's a chance that the market will do like that. Okay, you can see today's market goes up a little bit, and then today right now is a long shadow. So there's a potential chance that it might trap the people who go long and then will come back down again. Something like that. Okay, this is just my hypothesis. It might not come true. So we shall see how it goes. So I don't like hammer candlestick pattern. All right. Can. So talking about that, I go through already. So leading sectors and industry. Okay, leading sectors and industry. All right. So of course, as you know, November is ending already and we are heading into December. So I mentioned in my Facebook Live also, okay, heading into the end of the year, okay, seasonals wise, typically market is pretty strong and we are also heading into the mid-year election year. This is this year. So with the seasonals plus the mid-year, generally mid-year it is bullish, okay? And in December, actually, I've started really to see that the financial, okay, it is not too bad, financial, okay, and then the communication, XLC, and then the consumer discretionary. They are starting to lead a little bit already. I can see that, okay? To ask me how I see, I mean that also these are some things that I'm watching, all right? So XLC, communication sector, consumer discretionary, XLY, and then financial, you can look as well. Not too bad. So all right. So XLC, XLY, and XLF, these three sectors that you can take a look into December. Okay. But okay, I believe there might be a correction coming soon. Okay, I think so. Market can still go a little bit higher, but coming soon. All right. But don't be mistaken. Overall, okay, on the daily time frame, the market looks okay. So let me above the cloud, okay, above the central pivot range. So it is still uptrend on the daily time frame. But okay, if you're talking about longer term wise, I think I never talked just now. Okay, weekly time frame, we are overall still in a downtrend. Okay, so yeah, you still need to be careful. It could be, a suckers rally, a bear market rally. It could be, okay, but at least until the end of the year, I am still more optimistic, more bullish. All right, Ken. So individual stocks are just for you, I'll just go through. Normally, I don't talk so much on individual stock. Tesla, all right. Tesla, I want to talk about later also. Okay, this is the reason why the indices is weak. Okay, because of Tesla. Tesla, Amazon, okay, it has been going down. And it is actually dragging the whole index as well. So Tesla, okay, whether you are a short-term trader, you are a position trader, or you are a long-term investor, there is no reason to buy now. Okay, price is below the cloud. Okay, below the cloud. All right, below the central pivot range. All right, so it is still in a downtrend. So far, so I recovered on the leading sector industry. I don't want to talk so much on this. Okay, so talk about the market update. Okay, I think the Dow is just a limited upside, which might pull the S&P and the Nasdaq down also. So right now, I'm gonna go more importantly into this equal weighted index. Oh, now it's 12:15 already. The match has started. All right, CJ can update me on on the score or not while we are watching the the match. All right. So what is the equal weighted index? So the S&P, the Nasdaq 100, they are market weighted index, which means that okay, the very big companies are giving a very heavy weightage. All right. So like Tesla, Amazon, Apple, Google, etc. So the bigger company, a higher weightage. So equal weightage means it's a type of proportional measuring method that gives the same importance to each stock in a portfolio index or index fund. I will share with you this on the sleepcharts.com, so you will know more. All right. Okay, see here 1-0. Holland is leading. Okay, so the S&P over here, you can see that the weight analysis over here. Okay, so close. I'll post the link in the comment. Right, so this is a pretty cool site over here. Can you see the S&P index? Right, just the top 50 companies over here. All right, already total weightage is about 51%. So the big companies carries a lot of weight. All right. So it is just like, for example, okay, in terms of studying, you're doing the CA or the SA, continual assessment, no semester assessment. I don't know whether right now still has CA or SA or not. All right. Normally the like final year exam or the SA carry more weight than the CA. For example, SA carry more weight than the CA. So if you do pretty well in the SA, okay, then overall your grade for the year will improve because the SA carry more weight. Can understand? Can understand? Can, right? Or if you are in the university studying, right? Okay, so I don't know about you. Last time I don't have the GPA in NTU. So basically, first 2 years, it is not that important. All right, first 2 years not that important. The third year, fourth year, all the modules you take has more weightage. And of course, the FYP, the final year project, has the most weightage lah. If your FYP can do very well, okay, then very likely, okay, your result, your university degree, you'll be pretty good. You determine your, first class honors, second class upper or lower as such. Okay, so SYP will carry a lot of weight. That's the mean by the weightage. All right. So by the way, I'm an engineer by training. I'm from NTU, so material science. So last time NTU doesn't have the GPA rating, so it really depends on I don't know how they calculate that. Basically, FYP carries a lot of weight. Your year 4, and year 3 also carry more weight. Okay, just for information to let you know. Okay, all right. Okay, so let's take a look on and search over here the companies. Okay, let's go take a look over here. Can you see that Apple itself, okay, carries about 6% weightage already. Microsoft, I'll try to zoom in. You guys can see clearer, right? So Microsoft, 5% weightage. Amazon, 2%. Alphabet, 1.7%. Okay, and Tesla, about 1.43. Okay, so they carry more weight. And the smallest S&P 500 company, all right, I don't know what company is that. Okay, News Corporation Class V or the Vornado Realty Trust. Okay, they only carry about 0.01% weightage, and these are News Corporation 0.006 weightage only. So very small weightage on the S&P 500, and then this carry a very big weight. Apple, Microsoft, Amazon. Can understand, right? All right. And the Nasdaq company. Let's take a look. Nasdaq. Can you see that Apple itself on the Nasdaq 100 already has a 13% weightage, Microsoft 10% weightage, Amazon 5%, okay, Tesla 3% weightage. So all these carries a lot of weight. So if I say that, okay, I want an equal weighted index, for example, the S&P 500 over here, okay, which means that let's assume just 500, which means that each company only carry equally 0.2% weightage. You get what I'm trying to say? If you understand what I'm trying to say, just type OK, because 500, okay, times 0.2% will give you 100% total. Correct or not? So Whether you are a big company like Apple or small company, the very smallest company, doesn't matter. Okay, each carry the same weight. This is the equal weighted. So I think I mentioned before, all right. So for the S&P 500, okay, SP 500, okay, the ETF is SPY, right? This is the standard market weighted ETF. The equal weighted one is RSP, okay, RSP. All right. So let's take a look at the RSP today. Okay, so RSP. So let's take a look example over here. Let's do a naked chart. Easy to compare. Naked chart over here. All right. So on the left hand side, I will do S&P. All right. On the right hand side, I will do RSP. Okay. Looks almost the same, but it can tell you some differences. Okay. So right now, the S&P is only up 0.03%. 0.03%. Okay. 0.03%, while the equal weight S&P it is up 0.29%. Okay, so just by looking this alone, right, what can you infer? What can you infer from this? Right. With the understanding I tell you about the equal weight, all the companies hold equal weight. All right. Or the rest, S&P is the market weight. The bigger company carries bigger weight. Any answer or not? Any answer or not? Can anyone just give, at least one person give me answer, can or not? All right. Yes, we don't thank you for answer. Okay. All right. So smaller cap are moving. Yes. So which means that the smaller cap, in fact, are not so affected. So in fact, it is the big cap that is dragging the market down. The smaller cap are still okay. You see, it is still going higher, right? It is higher. Everything is over the market is okay, going higher. The bigger cap, the one is underperforming. All right. The smaller one is the one that's better performing. Can understand so far? All right. Which means that the bigger one is underperforming, while the smaller one are the one that is better performing. Okay. So this is the RSP, which I mentioned before previously. Okay. So another example, it is also the Nasdaq over here. I will go to the Nasdaq over here. Nasdaq over here. Nasdaq. Okay. Nasdaq. All right. So Nasdaq, there's also an equal weight one. Okay, equal weight one. So NDQ is the on trading is the Nasdaq 100 market cap weighted. All right. There's another one is the NDXE. Okay, NDXE. NDXE. Nasdaq 100 equal weighted. Okay. NDXE. You might want to take note of that. NDXE. Right hand side is the usual Nasdaq 100 index. The right hand side it is the NDXE. Okay. So yeah, okay. So it looks like the same to you, right? It looks the same to you, right? It looks the same to you, right? But actually there's a subtle difference. So I put in the Ichimoku cloud over here. Can you see a difference or not? Can you see a difference? Can you see a difference? Okay. For the usual Nasdaq 100 that you are looking at, follow my screen over here, it is still below the cloud. Okay, it is still below the cloud. Whereas for the equal weight 100, okay, it is actually has broken above the cloud already. Okay, which means that the smaller company, of course, Nasdaq 100, they are not exactly small, okay, but of course, compared to Tesla, they are still smaller than Tesla, they are still smaller than Apple, okay, which means that it is like Tesla, Apple that is dragging the whole industry down, whereas the rest actually are still performing pretty well. They are still performing pretty well. Okay, all right. You understand what I'm trying to say? If you understand what I'm trying to say, okay, just type yes in the comments. Henry, I don't think it's hanging. I think looks perfect. Fine to me, perfectly fine over here. Can you see or not? Okay, which means that the smaller one, the Nasdaq equal weight one, the overall market, it is okay. Price has broken above the cloud already. Can you understand? All right. So the smaller company are given more weightage, equal weight, everything equal weight. Can you see the difference now? Very important. All right. Okay. Let me go through this. All right. So my usual things over here. Let me add in this cloud plus CPR over here. Okay. Cloud plus CPR over here. So can you see Nasdaq is the weaker one actually. All right. And then how about the other indices? The other indices, there's this S&P. Okay, I'll write this. There's this S&P 600. Okay, that is essentially the small cap. And then there's this S&P 400. Okay, this is the mid cap. This is the mid cap. They also can also tells you a story. Okay, they can also tell a story. So S&P, they are IJR over here, IJR, and then the mid cap one is actually the IJH. Okay, there are different provider lah, but generally small cap XLY also can, then MDY, different provider, but let's just focus on IJR and IJH ETF. Okay, the small cap and the mid cap ETF. All right, so IJR over here. All right, then this is the S&P 500. Okay, so can you see that the mid cap, the small cap, sorry, the small cap, which you can also use IWM, the Russell 2000, but it is fine. But the small cap, it is actually also pretty strong. Can you see that it's pretty strong compared to the S&P 500, right? It went a bit higher than the cloud, all right. And then the mid cap IJH, all right. It is also quite strong. Can you see? IJH is also quite strong. IJH is also quite strong compared to the S&P 500 SPY over here. All right. Can you guys see the difference or not? Can, right? If you can, okay, very Singaporean, just type can in the comments. Can you see the difference or not? So the mid cap, the small cap, it is actually doing okay. All right. So this is one of the method where you can use, okay, by looking at the ETF, the small cap, the mid cap, and see how the overall market it is doing. All right. Without looking into other market internals like market breadth or up volume, down volume, advanced decline line, etc. And even though they say that these are IJR and IJH are market weighted, but it doesn't seem so. Okay, like for example, ETF.com say IJR. If you go to IJR over here, just wait for it to load a little while. Okay, so you can see the IJR. So the iShares Core S&P Small Cap ETF. All right. Okay, you can see it is, the top 10 holdings is just contribute 6.78% only. Okay, there's a lot of stocks inside. It's a very small percentage. So there's still a lot of more stock inside, and each stock is contributing about 0.61%, 0.5%. So it can tells you that overall how it is the market doing. All right. Okay. Another one that you can take a look is actually the Russell 1000. Russell 1000. RUSSELL. So the Russell 2000, I think most of you are very familiar. This is the small cap, right? Small cap. Okay. Russell 1000. Okay. It is the top 1,000 stocks in the US. Okay, top 1,000 stocks, top 1,000 stocks. All right. So if you take a look at the ETF.com, you can just put in Russell 1000. It is actually no need. We just Google first, Russell 1000. Okay, Russell 1000. It is a stock market that tracks the highest ranking 1,000 stocks. Okay, basically you can say that S&P 500 plus another 500. Okay, so total track about 1,000 stocks. All right. So for the Russell 1,000, that is, I think is RUI. Yes, RUI, that is the index. Okay, but I can say that it's almost the same as the S&P 500. All right. But there's this equal weight one, EQAL. Okay. All right. The equal weight Russell 1000, it is actually EQAL. Okay, you might want to take down that EQAL over here. All right, it can also give you some perspective over here, EQAL, EQAL. All right. Okay, EQAL tracks an index of the largest 1,000 largest US stock. Each receive equal weight, and each stock within a sector receive equal weight. Okay, can so far? Can so it can give you a very broad idea also how the market it is doing. The market is actually, for the Russell 1000, above the cloud, above the CPR, it is actually doing okay. All right. If you don't just see the Nasdaq 100 is coming down, that kind of thing now. All right. Okay. Another thing that I want to share with you is that, if you look at the S&P 500 index over here, all right, if you add in the, I just go back to one chart, easier to see. It was very confusing, right? Okay. So just go back to one chart over here. Okay. So I'll put a naked chart. I will just add the moving average. Okay, moving average. Okay, I'll just put in the 200 days moving average. So I remove this, remove this, remove this, remove. Okay, where is it? Okay. So you can see on the chart right now, it is the 200 days moving average. All right. So I think a lot of people are looking at this 200 days moving average. They said, hey, S&P is going to hit the 200 days moving average already. Every time it hit, okay, force break, come down, hit here and come down. Okay. And of course, the Nasdaq, it is also way below the 200 days moving average. But you realize that the Dow is actually above the 200 days moving average already. So generally above the 200 days moving average, it is uptrend, right? Okay. So the S&P index doesn't give you the picture, okay, because they are market weighted, which means that, okay, a lot of weight is on the big caps, and recently the big caps are actually not the strongest. In fact, the small cap and the mid cap are doing pretty okay. They are doing pretty okay. So let's just use the SPY as an example over here. SPY, the standard S&P 500 index, hitting near the 200 days moving average. Okay, but what if you look at the overall market? Okay, you don't give heavy weightage, equal weight, RSP, right? Is it above or is it below the 200 days moving average? Okay, just type in the comments below. Yeah, so Dow, Yang say Dow break above the August high level. Okay, all right. Above or below, based on your understanding of the market. All right, above 200 days moving average. Is it uptrend or downtrend? Don't use cloud or don't use anything. Just simple one. Above 200 days moving, it's above, right? It tells me that the 500 stocks, okay, are all doing pretty okay. Most of the other stocks are doing pretty okay. And And actually, you know, can see that actually we tested the 200 days, come down and then go back up again. All right, this is actually quite bullish. Okay, this is actually quite bullish. The equal weight S&P is already in a uptrend already. All right. If you look at the S&P, you look at the mid-cap stock. Mid-cap stock, it is IJH, right? IJH, right? IJH. This is the mid-cap stocks. Mid-cap stocks. Once again, can you see? Is it above the 200 days moving average or below the 200 days moving average? The mid-cap one. Above, right? It is above the 200 days, right? In fact, this is even better. This is even better. It break above the 200 days, retest the 200 days moving average, and then go back up again. So it tells me that the mid-cap stocks in the US are doing okay as well. Okay. All right. See bear market. I'm just trying to be objective. You realize what I'm trying to say? Right now, I think a lot of people are anticipating a recession. That's right. Okay, a recession could be coming, but it might not come also. And you need to realize that, okay, the stock market is not equal to the economy. Okay, you need to understand that. Okay, all right. And yeah, objectively, RSP, equal weight, mid-cap stocks, all right, they are above the 200 days moving. The overall, okay, condition of the stocks are uptrend. See me downtrend, you tell me see me downtrend, see me bear market rally, okay? It is an uptrend, right? Correct or not? If you agree with me, just type agree, all right? If you don't agree with me, you can just type disagree. It is fine as well. I respect your views, okay? Now go to the IJR, small cap stock, IJR, okay? Once again, small cap stocks with equal weight one, okay? Is it uptrend or downtrend? It is above the 200 days moving average also. Can you see over here? All right. Retest, cut breakdown. Right now, okay, it try to break below, all right, and then hit back up again. So this is once again the small cap, mid cap, S&P equal weight are all telling you that it is above the 200 days moving average. All right. So uptrend or downtrend. All right. So holiday season, Chunai said that stocks usually trending up. Okay, don't talk about holiday season. All right, just talk objectively. Okay, ignore the holiday season. All right, is it uptrend or downtrend? Uptrend, right? Of course, you can say that, hey, this is still a sucker's rally. Okay, price can do like that and come back down. It could be. All right, it could be. So like what Chunai said, coupled with the fact that, you know, it is the holiday season, Christmas rally, okay, plus mid-year election, okay, and price above the moving average. So my view, okay, is that we at least until the end of the year, I think we won't test the low in October, okay. We won't test the low in October. So price can come down a little bit and such, or a little bit steeper, but we won't test the low of the October. All right. Okay. So SF Wong is still saying a short-term rally. So you still think that this is a bear market, right? Okay. All right. No problem. All right, no problem. So we shall see how it goes. But for me, is that small cap, mid cap, equal weight, all is telling me it is above the 200 days moving average. Okay. You have to be objective. Okay. All right. As of now, it is like this. Okay. Again, I could be wrong. I repeat, I could be wrong. Essentially, the market, okay, let's go back to the S&P 500 futures, okay, the market can do like this, okay, it could be, I don't know, I really don't know, but as of now, objectively, why I see that the market, okay, mid cap, small cap, equal weight, it is still doing all okay, it is all okay, all right, and coupled with the fact that a lot of people are very bearish in the market, this gives me even more confident that the market has more room to go higher. Okay, Ken? So again, I don't need you to agree with me. Okay, I just trade what I see on the chart. So Alvin Yu is asking, possible to be a false breakout? Can, possible, definitely possible. So let's do that once again. So for example, the RSP here, equal weight S&P 500, right? Price can do like this and come back down again. Can, no problem. So by the time it goes like that, okay, then I will be bearish again. All right. So I'll wait for the price to go, like for example, okay, below the 200 days again, then I will become bearish. So right now, okay, at this moment in time, bullish. Objectively, it is bullish. Okay. So I don't predict, I only react. I will wait until price break below 200 days. Okay. Then like for example, the small cap, okay, they are also bearish and break below. Then I will turn bearish. Then I will turn bearish. Can? So I'm not a permanent bull or a permanent bear. I react accordingly. Market tells me that objectively it is bullish. Okay, I turn bull. Bearish, I turn bear. Can? I don't stick stubbornly to my view. All right. So as of now, as I mentioned, right, the Dow, it is hovering near the resistance level. Okay. As I mentioned, right, it is 34,700, right? Correct enough. Somewhere around there, right? So there's a potential chance that price, hit the resistance level over here and then do a very steep pullback. So that is possible. That is possible. All right. Ken, are you guys learning anything new today? Okay, if you learn something new today, okay, talking about the equal weight, talking about looking at the various small cap, mid cap, equal weight, all this, okay, all right, you just type new in the comments. Just type new in the comments. Okay, just type new in the comments. Right. And then this I just want to share with you that on this day itself, okay, can you see that this the Nasdaq index, cash index. All right. So let me share with you on this day. On this day, all right. Follow my horizontal line over here. Vertical line. So on this day, right, the Nasdaq is down 1%. The Nasdaq is down 1%. Okay, 21st of November. 21st of November. All right. So for those who are not following the market, then they will get scared. Market is down. 1% down. Market is bearish. It's going to be a suckers rally. The market is going to come down again. Okay, Nasdaq is coming down. Tech stock go down again. All right, 1% down. But if you really look into it, it is because Tesla and Amazon was down big. That's why it dragged the whole Nasdaq 100 down. All right, 21st of November. So you look at that, 21st of November, okay? 21st of November. So you go back to RSP, equal weight, 21st of November, okay? It is over here. Equal weight one, okay? The whole 500, all the stocks, okay? It is flat. It is flat. It is just minus 0.04%, and it's a green candle, okay, which tells me that, okay, the market internal, the whole overall broad market, it is okay, no issue. okay, all right. And then, for example, look at the mid cap. If you're concerned, look at the mid cap, like I A H. 21st November, okay, all right. 21st November over here. Also a green candle, just also flat. Okay, BDJ, okay, BDJ, all right. And then small cap, IJR, okay, also 21st. Okay, the small cap is down a little bit, okay, but not as weak as the Nasdaq. So overall, small cap, big cap, mid cap, all okay. So no need to scared. You see the Nasdaq 100 down 1%, then you're like, wow, very scared. Okay, this is one way to look at the market without looking at the market internals. Like as I mentioned, VIX or the up volume, down volume or the advanced decline line. Okay, Just look at those equal weight stocks, ETF, can give you a very good idea on how the overall market is doing. I think I am the only one. I'm not sure. I'm not very sure in Singapore that tells you that the market is like in an uptrend based on looking at the small cap, mid cap, equal weight ETF. All right, market above 200 AMA, 200 days MA. Okay, I think right now I'm the only one who say that. Okay, of course I could be wrong. I could be wrong one. So just listen with a pinch of salt until I am proven wrong. Then I will turn bearish. So right now, above 200 days moving average, bullish for now. Can understand? All right. So I remember November, December 21, because of the big cap holding the market, many said that the market was still strong. Yes, but the mid cap start breaking down. Yes, that's right. Actually, in fact, the rest of the stock, right, already started to break down, okay, in the late last year, 21. So this is just like reverse. Instead of November, December 2021, okay, starting breaking down, okay, this is reverse. The small cap, mid cap are doing much better than the big cap. Okay, you understand what I'm trying to say or not? All right. Hey, Jay is here. Jay, it is in Sweden, eating his hot dog. All right, long and thick hot dog over here. I'm just kidding. Okay, yeah. Greetings from Sweden, right? So, are you guys learning, right? If you think this is good stuff, okay, just type great in the comments. Just type great in the comments. Okay. All right. So I think I already share with you my idea already. Okay, I share with you the market update. We are somewhere near at the top. Okay, for the Dow. Okay, 34,700 based on the Dow Jones futures. So upside limited. Okay, all right, upside limited. So don't chase the market. All right. I still think that it can go a little bit more. Okay, but limited, which will affect the S&P and the Nasdaq. And I also mentioned that I'm looking at the VIX, okay, whether there's a star signal and also the VVIX ratio. And if they give me a potential star signal to go for reversal, then I'll be very cautious about the market as well. Okay, and then the leading sector industry and December, okay, hopefully I hope there will be a pullback. Then in December, then you can look at the some of the leading sector, like for example, like the financial in December, consumer discretionary, and also the XLC communication in December. So I think I think this one very important. Very important. Look for all the equal weight. Okay, so for the Nasdaq equal weight, it is actually I didn't show you the Nasdaq equal weight, right? Nasdaq equal weight, okay. You all know that QQQ is the Nasdaq ETF, right? So the Nasdaq equal weight, all right, ETF is actually QQEW. QQEW. QQ equal weight. Then you can understand this is the equal weight. So it's QQEW. All right. Can you see again? All right. Just trying to show you, right? The index and versus the ETF over here. QQQ below cloud. Nasdaq equal weight above cloud. All right. So it is stronger. The rest of the stocks are stronger. All right. So I think that's all for today. I want to go and watch soccer already. 1 hour, 20 minutes. 讲太多了, talk too much again. Okay, but again, very important. Look for the equal weight, small cap, mid cap, large cap, all take a look, and you will have a different perspective on how the market is doing. As I mentioned, nowadays, now mid cap, small cap, above 200 days MA, market is doing fine. Okay, until I'm proven wrong, then I'll turn bearish. Right now, still bullish. Okay, I think I give you enough kind of my view. Of course, I could be wrong, so please listen with a pinch of salt. So I think with that, thank you so much for staying with me until near 1 a.m. So have a good weekend. Go and watch your soccer later. 3 a.m. England versus United States. I think I'll be watching. Okay. So yeah. So thank you so much. Have a good weekend. See you next week. Good night. 晚安. Bye bye.